If I had to start building a space watch list today from scratch, knowing what I know about how Wall Street behaves when a giant private company gets close to the public market, I would do it very differently. Most people think the move is to wait for the IPO itself, then chase the opening print like they've discovered fire. I don't think that's the real opportunity anymore. The real opportunity usually shows up before the ticker starts trading, when portfolio managers start looking for public stand-ins, when the media starts building comparison lists, and when retail decides it does not want to be left outside the velvet rope. Today is Tuesday, April 14th in New York, so before we go any further, comment the day and date you're watching from. And real quick, if you value the way I break this stuff down, subscribe and comment John A.G. Best, so I know you're here with me. Because this isn't just a story about one rocket company. It's a story about what happens when the market starts believing that the biggest private name in space is finally getting serious about a listing. Recent reports say that SpaceX confidentially filed for a United States IPO, with talk around an analyst day later this month, a retail-heavy structure, and a roadshow target around early June. The valuation chatter is huge, somewhere in that high 1 to low 2 trillion range, which is the kind of number that forces people to stop treating space like a niche and start treating it like a category. Now let me say something right here that I think a lot of people are going to miss. A confidential filing is not the same thing as a finished deal. Big offerings can get delayed. Windows can shift. Investor appetite can cool. Politics can change the mood in a week. So I'm not telling you the listing is guaranteed on some perfectly neat timetable. I'm telling you the conversation is already powerful enough to move money. And in markets, sometimes the conversation matters almost as much as the event. That's the framework. When the street starts building around a blockbuster IPO, it looks for the names that are easiest to explain. It wants the direct public proxy. It wants the infrastructure supplier. It wants the recurring data business. It wants the moonshot with telecom upside. And it wants the rediscovery candidate nobody cared about 6 months ago. That's why I think the real move is to watch a handful of public names that can get pulled into the spotlight as comparisons, substitutes, or beneficiaries of the attention wave. But let me challenge the easy version of this thesis for a second. Not every stock in the same theme gets magically re-rated. Sometimes the giant newcomer actually exposes how weak the smaller names are. The market does not reward space as a word. It rewards business models that survive scrutiny when fresh eyes show up. So yes, attention matters, but quality matters too. That's why I'd rather focus on 5 names that already have real operations, real contracts, or real strategic relevance instead of just a cool deck and a nice logo. There's another reason I think this setup deserves respect. SpaceX is not coming into the public market as some tiny moonshot trying to prove it belongs. Recent reports show the company is talking to bankers and analysts about a deal structure that leans into retail participation, and that matters because retail-heavy excitement changes how the whole conversation spreads. It moves faster across social media. Faster across trading apps, faster across headline culture. And once that happens, the comparison game goes from institutional to mainstream in a hurry. But this is where I want to throw in a caution sign. The market loves to turn every giant listing into a once-in-a-generation event. Sometimes that's true. Sometimes it's just a nice way to make people pay any price. A huge private valuation can create excitement, yes, but it can also create a high bar. That's why I keep coming back to the public basket around the story instead of blindly assuming the centerpiece itself will be the easiest win. And look at the backdrop these names are entering. Rocket Lab is talking about defense architecture work and a growing medium-lift roadmap. Planet showed strong cash generation. Redwire is leaning into defense technology and autonomous systems. Firefly is trying to turn lunar credibility into a broader operating platform. AST is tying itself to major carriers and the everyday phone use case. These are not identical stories. That's good. You don't want 5 copies of the same risk. You want 5 different ways the market might decide to express the theme. Which one has the cleanest path to being the public proxy? And which one ends up being the winner nobody gives enough credit to right now when momentum hits? The first one is Rocket Lab. This is probably the cleanest public benchmark for investors who want something that feels closest to an actual listed space platform. It launches, it builds, it integrates, and it increasingly looks like more than a one-trick rocket story. According to the company's latest annual results, it just posted record yearly revenue, a record backlog, a record launch year, and a perfect mission success record across the missions it flew last year. It also highlighted a large contract to build satellites for a defense architecture program, which matters because it tells you the business is not trapped inside a single commercial theme. That matters a lot more than people think. Because if the SpaceX listing turns into a giant public market measuring stick, investors are going to look for the listed company that already has breadth, not just launch clips on social media. Breadth, Rocket Lab has launch services, space systems, components, spacecraft work, and the medium-lift Neutron program still moving forward. That gives the stock multiple ways to matter. And when a sector catches fire, names with more than one way to win usually hold up better once the first blast of hype burns off. Now, the honest pushback is simple. Everybody already knows this one. It is not hidden. It is not sleepy. It is not a neglected microcap waiting for one article to change its life. So if you buy it, you are paying for quality and for familiarity. Sometimes that still works beautifully. Sometimes it means the market already did half the move before you arrived. That's why I think Rocket Lab belongs at the top of the watch list, but not in the fantasy bucket where valuation suddenly stops mattering because everybody is excited. Second, I'd keep AST Spacemobile right near the front of the screen. This is the audacious one. If it works, it could end up being framed as one of the most important communication stories in the market, not just a space story. The pitch is incredibly easy for people to understand. Your regular phone, no special gadget, space-based cellular broadband. AT&T says its satellite plan with AST is designed to work with everyday phones, and Verizon's agreement says the network can connect directly to standard smartphones while extending low-band spectrum into weaker coverage areas. That kind of message can spread fast because it is simple, visual, and tied to a problem almost everybody understands: dead zones. But ease of explanation is also what makes this one dangerous, because a good story can outrun a hard reality in a heartbeat. AST still has to execute at scale. It still has to build out, prove economics, manage capital, deepen carrier integration, and show that technical milestones turn into durable commercial revenue. So I do not put this in the safe bucket. I put it in the huge upside, huge volatility, and plenty of ways for the market to test your patience bucket. Still, if the SpaceX IPO narrative becomes a broad retail obsession, this name has one of the clearest retail-friendly stories in the whole sector. Third, Planet Labs. I think a lot of people are going to underestimate this one because it does not scratch the same emotional itch as a launch company. There's no giant rocket plume here. There's no theatrical moon language. It's quieter. But sometimes quieter businesses are exactly what institutions gravitate toward when a hot theme starts maturing. Planet is basically a space-enabled data business with a growing operational track record. Based on recently published numbers, it delivered record annual revenue, sharply higher backlog, strong remaining performance obligations, and meaningful positive free cash flow for the last fiscal year. Management also highlighted satellite services wins and a research partnership with Google around data centers in space. That combination is interesting because it broadens the story beyond simple Earth imagery and pushes it toward a larger conversation around data, infrastructure, and software-like monetization. And that's the real appeal here. Planet is not just trying to sell images. It is trying to become part of how customers track what changes over time without rebuilding the wheel every week. That recurring relationship matters. In a market where attention is rotating toward the sector, a company with a subscription-like spine and a growing archive can suddenly look a lot more attractive than a business that depends on one-off excitement. Fourth, Redwire. This is the infrastructure and defense crossover that I think could surprise people if the market starts broadening its search beyond the obvious names. Redwire's latest results showed accelerating quarterly growth, a record contracted backlog, a higher book-to-bill profile, and a larger defense footprint after the Edge Autonomy acquisition. The company also pointed to a contract win with DARPA and described itself more clearly as a multi-domain space and defense technology company, which is important because defense budgets and mission urgency have become a real part of the sector backdrop. And let's be honest, that backdrop has changed. Space used to be a story people told mostly through exploration and ambition. Now it increasingly gets told through resilience, surveillance, communications, missile warning, autonomous systems, and national security. That shift matters for valuation. A company that sells the picks and shovels into that environment can suddenly pick up a much bigger audience than it had before. Redwire is not the flashiest ticker on this list, but it may be one of the more durable ones if the market starts rewarding practical capability over cinematic promises. And then there is Firefly. This is the one that feels most likely to be rediscovered fast if coverage widens. Why? Because it hits several themes at once: launch, lunar services, defense software through its SciTech acquisition, and, maybe most important of all, a very real piece of moon credibility. NASA confirmed Blue Ghost landed successfully on the moon last year as part of the broader Artemis-related effort. That is not a small talking point. In a sector full of aspirations, a real landing carries weight. From recent company results, Firefly also posted a huge revenue jump, guided for another major step higher this year, and pointed to a backlog that is already substantial relative to the size of the business. That gives investors a way to frame it as more than a single mission headline. It gives them a growth story with receipts. Now, I want to be careful here. Firefly is probably the easiest name on this list to oversell if people get carried away. A moon landing makes for a beautiful narrative. It does not guarantee smooth scaling, clean margins, or a straight line from here to greatness. So yes, I think it belongs in the conversation. But I also think this is where people need to separate credible from already inevitable. Those are not the same thing. So if I'm ranking the watch list by how I think the market might naturally organize itself around the SpaceX story, I still put Rocket Lab first as the most obvious public comparison, AST Space Mobile as the bold telecom moonshot, Planet Labs as the recurring data operator with stronger financial quality than many realize, Redwire as the infrastructure and defense angle, and Firefly as the rediscovery candidate with lunar proof and rising momentum. And here's the bigger point. The trade may not be buy SpaceX after it lists. The trade may be own the public names people reach for while they wait. That is a different mindset. It is also, in my opinion, a more disciplined one, because it forces you to ask which companies actually benefit from the attention wave instead of just assuming the biggest headline must be the best stock. History is full of giant public offerings that delivered enormous noise and very mixed returns. So I'm not married to the idea that the IPO itself will be the cleanest money. In fact, I'm a little skeptical of that assumption. Sometimes the anticipation is the trade, sometimes the comparison basket is the trade, sometimes the only people who really win on day one are the ones who got in long before the rest of the crowd finished refreshing their brokerage app. What do you think the market chases first if this listing story gets even hotter? The obvious benchmark, the direct-to-phone moonshot, or the quieter data and infrastructure names that institutions might actually prefer? And another thing. If you're successful, share your success story in the comments so others can stay motivated. Because this is one of those moments where attention, narrative, and real operating progress are colliding at the same time. From recent market updates, investors are already being fed a bigger menu of space-related catalysts. Lunar programs, defense demand, direct-to-device connectivity, satellite manufacturing, orbital data services, and now the possibility of the largest listing Wall Street has ever had to frame. When several themes start reinforcing one another, money tends to move before certainty arrives. So stay sharp. Do not confuse popularity with inevitability. Do not assume every stock in the theme deserves the same treatment. And do not wait for the story to feel completely safe, because by then the market usually has already moved. Use the hype, but don't worship it. Subscribe if you haven't already, and tell me in the comments which one of these 5 you think has the best mix of upside and staying power if the whole sector gets repriced. And as always, take this for what it is, an educational breakdown, not marching orders. I'm giving you a map of the terrain as I see it, but you still need to do your own digging, make your own decisions, and keep your risk where you can actually sleep at night.